Also, we've got to check on those big tech names. Just reference them. Amazon, Google, Microsoft, Facebook all hit all-time highs. You can see looking good this morning again. I want to bring in Ashley Webster, Elizabeth McDonald, Keith Fitzgerald, Todd Horwitz. And Keith, big tech, we got to talk about them. Can anything stop them at this point?
You know, short of some sort of geopolitical event, no, I don't think so, because they're all about the future. They've got the numbers. They're putting them up on the board consistently, and I think that's really where you want to be.
You know, the NASDAQ 100 in just one day added $200 billion in market value. Just on Friday. So that's a big deal. And Keith's absolutely right. When you look at Caterpillar, I'm talking the NASDAQ 100.
Right.
The Caterpillar's forecast got lifted. It increased its 6.25 EPS from 5. So Caterpillar's about global growth. This is about the future. Keith's right.
I love Caterpillar's numbers last week because, to your point, they hired 2,800 people in America, 3,300 outside of America, but the North American numbers are through the roof. Durable goods spending is through the roof.
Yeah.
It's really amazing. I mean, we are firing on all cylinders right now.
We are, and so is China-Pacific region as well, by the way. China coming back strongly, and I think Caterpillar's numbers were up 21 to 25% year over year for their demand from China. So that's only the global economy adding to the tailwinds.
Are we too sanguine, Todd? What's going on?
Good morning, Charles. Hey, listen, you know, we're going up, and I'm not going to fight it. I mean, I'm always long the market in general, whether I'm in the short term, I'm trying to short this market, but long term, I'm always long. But I think we have one problem nobody's talking about. That's the amount of debt that we have. I mean, debt is at critical levels, and it continues to grow. Auto, student, and general debt. I mean, at some point, we're going to have to answer all these debts, and they're going to have to be paid back. We cannot keep continuing to live on that cheap, free money that we've been getting, and that's going to be, I think, the problem that will come to fruition at a later date.
All right. In the meantime, Paul Manafort surrendering to authorities this morning. The question is, will that derail President Trump's growth agenda? Keith?
You know, I'm watching that story very carefully, Charles. So far, it has not been anything more than a distraction. And as long as it stays that way, I don't think traders are going to give it a second thought. However, if this balloons into something that's unthinkable, yeah, we got a problem.
Yeah,
but
to Keith's
I don't see
point,
it just yet.
You know, there won't be a Perry Mason grand trial. 90% of these cases go to plea bargain. The judge was right. I mean, who gets squeezed and what further charges are brought in the Trump empire against individuals there?
For the moment, though, it does. Well, the judge was here, Judge Napolitano, and he does say that the timeline extends into September 2016.
Right.
So that does bring him into President Trump's orbit. But the
Democrats are already going to put this right into the camp of the Donald Trump campaign, and even after the election, they're going to try and do everything they can to associate Paul Manafort with Donald Trump.
And
we know that.
And Rick Gates, who was also charged, was at a Trump PAC, rather, through April of this year.
That was the America First PAC?
Yeah.
Yeah. You know, Todd, again, these guys, according to the indictment, set up domestic accounts and companies and foreign accounts and companies. But we're talking a timeline that goes back to 2006. So, you know, maybe their association with President Trump just, you know, long after this, it couldn't have been somebody thought all of this stuff out a long time ago. So I know the headlines are going to say one thing and mainstream media is going to say one thing. Will the market be influenced by this?
No, I don't think so, Charles. I think the market's going to continue on its current course, and I think that the next big step will be when they unveil the tax plan on Wednesday, right, and whether or not the street realizes it and likes it. It'll be whether or not they want to cut into these 401ks. That will be the key issue, and then whether or not it will pass. I think that's the real thing, barring something totally unexpected. This Manafort, I think, has nothing to do with it. Will not hurt the market one bit at all as it continues to process, because they've been after Trump since he started.
Well, speaking of the tax plan, the National Association of Home Builders not happy with what they're seeing so far. They said they're going to oppose a Republican tax plan because the change that it would have with these home mortgage deductions. Keith, this is the first major entity that say they're going to push back against a Republican. Just how big of a blow is this?
You know, in the scheme of things, Charles, probably not that big. But, you know, this is all about special interests right now, and you're going to see anybody who can grab a headline will, because they're going to plead their case. I think we have to take a look at the bigger picture, which is what the president is trying to do, what Congress ought to be doing on both sides of the aisle. How's it going to impact the average American? Then make some decisions.
The bottom line, though, guys, is that because of reconciliation, you know, and the neutrality aspect of this, they've got to come up with some sort of scheme to make up for the $1.5 trillion. And so we've heard all kinds of cockamamie things in my mind, like the border adjustment tax. Keith, what are they going to do? They're not going to do this SALT. And by the way, a lot of our viewers think they should get rid of those state and local deductions because it's an unfair subsidy to rich states. So if they keep that intact, they don't mess with the 401ks, where does that money come from? And how do they get us an effective plan by Wednesday?
I don't know. This is a lot like taking blood out of your left arm and putting it in your right arm. Congress has got to stop the fancy accounting. And again, get back to the basics. How does the average American come through this? That's what really matters. Those folks have still not recovered from the financial crisis.
But
and
here's the
until
thing.
Congress gets with the program, that's what we have to deal with.
I mean, this whole thing about the deficit, right? I mean, we get it. We don't want to blow out the deficit. But when Reagan cut taxes, revenues did come pouring in. The deficit did grow at the same time. But, you know, Nancy Pelosi's out there saying this is an assault on the middle class. Why doesn't, by the way, Joe Biden, John Kerry, and Al Gore, and Pat Leahy, who's still in office, they all voted for the Reagan tax cuts. They didn't think it was an assault on the middle class. He's doubling the number of people who will be in the zero tax bracket paying no taxes.
That's a tired old line, isn't it? So tired. They got nothing else but just come back with that. I don't even think they even read
the first
what the
page.
plan is.
It's the first page, the first line in the first page of a very old playbook.
Yes.
Yeah.
Hey guys, let's talk about this retail ice age. It's really a retail brick and mortar ice age. But Citigroup today cutting its price targets for two of the big names out there, Macy's and JCPenney's, which has really been getting rocked here, telling investors to sell both. Todd, you know, I think the writing's been on the wall, particularly for JCPenney in the last 2 weeks. But what do you make of it with respect to the state of the consumer?
Well, I believe, Charles, that the overall retail ice age is here because we don't have a need to go out. There's no more of the family outings to run out. People, the middle class still doesn't have enough capital to go out and have that enjoyable day where they want to go out and spend extra for gas and maybe pay a little bit more at the mall. Now everybody can go to Amazon or wherever online. You get it delivered to your house for free. You get the goods. You don't have to do anything. So I think that's the bigger problem. Amazon has really changed the way that we shop, and now tie in Walmart. That was the original changer, and we don't shop the same way anymore. And now it's always about the dollars and cents, not the actual family outing to the mall. And that's why I think we're seeing these stores melt down.
You know, Keith, to that point, I think people are going out, but they're living in the moment, right? It's you know, live now. They're spending for experience, and if you want to buy something, you buy it online. I think most folks don't realize that Amazon and Netflix are part of the S&P consumer discretionary sector, not the tech sector, and that hit an all-time high. It's just how we shop is really what's changing.
I think that's a very important point. And I'll give you an example. Yesterday, I went to equip two of our kayaks with identical safety packages yesterday. I walked into a bricks and mortar retailer who shall remain unnamed. I found one of various items. So the person at the checkout counter said, "Did you find everything you wanted?" And I had to say, "No, I'm going to go order it online." I mean, it was, you know, the retailers don't even stock stuff anymore because they can't keep up.
It's tough, man. They're in the catch-22. I want to check on the big board here, guys, because we've been open. We were down as much as almost 90 points. Now we've cut that in half. Again, remember, keep an eye on these markets. The buy on dip is in full effect. Nobody wants to miss this train, and those who have, particularly those big money managers, are buying almost all the dips. Now let's take a look at the price of oil. They've been going up. Expectations now that OPEC-led production cuts are going to be extended. In the meantime, Diamond Offshore Drilling reported higher profits. The company says it secured more contracts for its deep water drilling rigs. Those are more expensive to operate, so that's a great sign. In the second season of the hit Netflix show Stranger Things debuted on Friday. Netflix making a big move into merchandising on this. The company is working on licensing deals for action figures, board games, all kinds of things related to Stranger Things and, of course, its other shows as well. And a new report claims that GE's board was kept in the dark about ex-CEO Jeff Immelt's use of a spare business jet. It followed him around. Todd, I mean, GE, listen, obviously they're in trouble. They've got a new CEO who's trying to cut everything back. But this is another major setback for this company that really spent the last decade falling apart.
Well, they've totally fallen behind the entire curve, Charles. They became like an IBM and the other companies that couldn't keep up, and they had too many fingers going too many places, and yet the CEO's got enough stones to take another airplane to follow them in case there's a problem with one. And the board not knowing about it. I mean, I find all that hard to believe and hard to fathom that this is all possible, that nobody knew there was a second plane following this guy around.
All right, in the meantime,
Who
guys.
did they think it was? A fan following Jeff Immelt on a plane? Who did they think it was?
In the
And by the
meantime,
way, you know, it was registered under Robert Jeffries or Jeffrey Roberts. Jeffrey Immelt's full name is Jeffrey Robert Immelt.
Wow.
That's what the plane was registered under.
But he said he didn't know about it either. By the way, guys, NASDAQ just hit an all-time high. It doesn't stop. Hey, Keith, Todd, thank you guys very, very much. Appreciate it.
Thank you so much.